Good afternoon, ladies and gentlemen. Welcome to Market Today. The last 1 hour of trade on Friday, which is also the last working day of this week, is bathed in green. The Nifty is up 92 points. The battle for supremacy between the bulls and the bears is at 23,850 today. The NSE 500, the broadest index that we track, is up 61 points, showing you a lot of enthusiasm for the broader market on the long side. The Nifty Bank added 144 and the IT index is up 64 points. In the wider space of the Lal Street, you see hectic momentum as far as bulls are concerned. You'll notice that the advanced decline ratio at the moment is 1380 shares versus 1000 that are in the red. We tracked 19 indices for you out of 19, 16 in the green, and it's led by the auto space 1.5% higher, pharma space 1.4% higher. The mid cap and the small cap indices are also better placed. We had seen profit booking early morning, but all of that and a little bit more coming back to the small cap index up 1/3%, and the mid cap index for the moment adding just a bit at about 57,174. Within the NSE 500, the advanced decline is 300 to 200. So bulls have a fine day out on the last street as far as the sentiment is concerned. Very quickly, I'll tell you the stocks that are doing pretty well on the Nifty. It's the auto day, therefore M&M is leading the parade, 2.9% higher. 3061. Strong moves coming into ICICI Bank, the third highest weighted counter. Infosys in good shape, 0.5% higher. ITC now starting a rally ahead of its planned allotment of ITC hotel shares to existing shareholders. What's in pain? SBI 10 points lower on the Nifty because of the 1.1% cut in SBI. L&T down a bit, Hindalco a bit lower, ONGC and HCL Tech are the shares that are in pain. What we'll do, ladies and gentlemen, is we'll start a conversation today with Mr. Deepak Ramaraju. He's the senior fund manager at Shriram Asset Management Company and a very fine individual as far as picking up the pharma space is concerned. Very good afternoon to you, Mr. Ramaraju. A very warm welcome to you in Market Today. We've seen a fairly disturbing quarter since September till about December, even the last 2 or 3 days. How do you read sentiment on the Lal Street, and what do you make of this very sharp downdrift that has happened since the high that was hit in September and about a month's low that we are now seeing in December?
So, good afternoon. First of all, thank you for having me on the show. Definitely, yes, the sentiments are a bit lower since September onwards. You're very clear on that. So that's specifically because we are seeing a bit delay in the government spending. The economic slowdown is being impacting the bottom line of the entire economy, especially. So when I tell that the bottom of the economy, it's almost to do with MSME, and the lowest rate of the economy is getting impacted because of this slowdown. And this delay is what been the primary reason for that. That is one. And second thing is we also had a kind of uneven weather pattern during the course of the year. So that also led to the kind of higher food inflation. Also, the food inflation was also a bit sticky. And adding to this, the geopolitical conditions or geopolitical factors like your weakness in rupee and as well as dollar strengthening and kind of uncertainty on the global front also impacted a little bit on the overall demand scenario for especially from the exports point of view. All these things led to the kind of overall slowdown in the economy. And that's been the primary reasons why the markets are also have taken a kind of beating, because that's going to impact the earnings of the company. So clearly there has been a bit of slowdown, and that's the reason we are seeing the markets consolidating right now, and we are seeing a kind of the sell-off happening, and especially the most sell-off is being come from the FIIs. So they have been the major sellers in the markets in the last in the last 4 months right now. So that's primarily the market movement.
Right. Deepak, let's just drill down to what your AMC has been doing over the last 3 months. Could you please share with us what's the highest weighted sector in the overall AUM that Shriram AMC enjoys for the moment?
So we run a kind of our investment philosophy has got to do with the fundamental approach. So we run a combination of quant and as well as fundamental. So within the quants, we look at multi-factor kind of an approach where we look at momentum, volatility, and kind of valuation kind of a basis. So definitely the momentum is kind of taken a backseat right now. It's the low volatility and as well as the value that is kind of outperforming relatively compared to the momentum. So when that is the case, so the sectors that we generally kind of positioning is as of now on the highest side is pharma, followed by FMCG. Consumption as a theme is kind of overweight as of now. Within that, we have this consumer durables and as well as consumption services. These are the sectors we are kind of grossly overweight. And apart from that, we were overweight on auto a little bit till the middle of September and end of September. As we entered the end of September or October, we kind of trim our positions on the auto space because the slowdown had kind of impacting the entire consumption side of the auto side. So that's the reason we kind of trimmed our position on the auto space to a large extent. But we increased our positioning on the IT little bit. So after that, so the highest weighted sector as of now, we continue to hold pharma as being the highest bet as of now, and it's almost like 25% of the overall portfolio.
Okay. I'm sure you will not be naming stocks, but how much is the 25% AUM in terms of actual crore rupees, and how many stocks has this been spread over within the pharma and the hospital space?
So we have almost like the total AUM is around 600 crores all put together. So within that, if you look at the overall exposure to pharma space is almost close to 24%. And to name that again, it's almost 200 crores of exposure that we have almost close to all the entire pharma space. And almost 14 to 15 stocks are being kind of the cross holding across the portfolios in the pharma space as well.
Okay, let's also, in the same breath, examine the auto space. This Vahan registration data for the month of December has been terrible for two-wheelers. For instance, Hero Motors is the top loser in the auto space. And of course, Maruti is not doing anything great at all. But my question is on Tata Motors. At about 785, 750, in terms of the valuation parameters that Shriram AMC employs to pick out undervalued stocks, where does Tata Motors stand?
So definitely Tata Motors from a valuation, I won't be able to talk much on individual stocks per se, to be frank, but yes, from a valuation perspective, yes, we are seeing a bit of correction happening in the entire auto space as a whole. That's primarily led by the larger weights like your Tata Motors and Maruti as a whole as being kind of relatively underperforming, especially from a sales point of view. And definitely, yes, the markets have also kind of punished discounters, and we are seeing the valuation also correcting quite a bit. And definitely, they are coming to a decent valuations. Now we should see a kind of turnaround and pick up, and once the consumption starts picking up. Now, the overall consumption to pick up, there are multi-factor or multi-levers that has to play out. One is your government spending, which is slowly picking up post-elections of Maharashtra elections. We are seeing the government spending slowly picking up. That's early days of kind of spending coming back on track. So that means to say the manifestation of that spending into the actual consumption of at the bottom of the economy will take at least a quarter or two for that to reflect on the kind of consumption to pick up. So at least in my view, for another 1 to 2 months, you'll see some kind of slowdown in the entire space. So it would take some time for the auto stocks to come back into limelight again. So I would wait till before the consistent sales trends come into picture there before I make a kind of entry into that count.
Okay. Deepak, till September, in fact, late September, Nifty was up 21% year to date in the 9 months that lapsed on September 30th. And now we have a situation that we are, barely above inflation a little bit more. So, maybe 9 odd percent. But a huge winning streak for the Nifty, up for the 9th day in a row. What is your prognosis of 2025, and what are the 2 or 3 drivers that will either fuel bulls or will fuel bears?
Now, there are 2 parts to this. First part is why Nifty kind of underperformed. One, because FIs have been the clear sellers in the market. And FIs have generally been selling into the large caps and to a certain extent in the mid caps to a broader perspective. So the most highly liquid counters is what has been impacted quite a bit, especially where The free float is much higher and FI holding is always been higher. So those are the counters where we are seeing deep correction happening in the markets, and that's the reason you're seeing the FIs, the Nifty 50 kind of underperforming the broader based markets indices. Now, what can turn around in 2025, we'll have to expect for the government spending to pick up. But if you look at the currency right now, that's kind of in the weaker spot. It's kind of almost breached the 85 mark. And today's TREPS rate, if you look at closely the TREPS rate, it even breached the 7% kind of yield. So that's a kind of very scary scenario for, especially from an economic point of view. There's an indication, early indication that the rate cut might be delayed further, because the TREPS market is actually a manifestation of the kind of deficit happening in the system. Though we are seeing a kind of CRR cut happen taken up by the RBI, so that's going to the manifestation of that into the actual liquidity flow into the market would take some more time. So that means to say that TREPS market is actually kind of reflecting the kind of pain in the economy. So that means to say the rate cut, which was earlier kind of expected in 2020, the February, might be switched to April as a whole. That's my personal expectation. The rate cut might happen by 25 basis point in month of April. And for the entire year, I might expect one or two rate cuts, not more than that. Because though the rate cut is a very critical aspect for the government, because that will improve the kind of the growth per se, but also the inflation is also a key concern. Because one side we are seeing that Trump policies can also come and hamper the kind of the future kind of the policies can also impact on the export side of it. So the exports are already currently weak. So now the government has to focus on increasing the expenditure and also focus on managing the currency, at the same time controlling the deficit, and also look at the inflation as well. Now the inflationary pressure will also come from the external factors, because if the external inflation generally tends to go up, that means so that will get manifested in the form of currency. The currency is already weakening, so that will impact to the leading to the imported inflation getting higher. So these are the factors one needs to be watchful about. So from a market perspective, it's going to be a year of consolidation or a year of polarization in the markets. You can expect the large cap certain, just like a 2019 kind of a year where only selected large caps kind of outperform. That can be a scenario. It's going to be the quality and it's going to be a stock pickers kind of a market. Only selected stock which have got that kind of edge on the earnings, where the forward earnings will be delivered by the management on a sustainable basis. Those will be the kind of stocks that will go to outperform the broader market. So it's going to be a stock pickers market in the 2025, and you can expect some kind of polarization happening in the markets as a whole in 2025.
My next question will be on macro, Deepak. As you point out, the weakening of the rupee, slowing exports, and rising inflation, do you think the government has taken its eye off the macro ball over the last 6 months or so? Of course, inflation was also fueled by this very unpredictable monsoon. But what is your prognosis of this mild problem that we face on the macro front?
So one is from a macro front. Actually, if you look at, yes, definitely the currency has been a major concern right now. The economy is kind of impacted, especially because of the slowdown in the exports, clearly. And the imports, definitely the crude is being kind of lower. So that's actually helping the imports to a certain extent. Now, the crude also turns up on the higher side. That's going to be detrimental for the Indian economy. So that's going to lead to the imported inflation being a bit higher. So the government will have very limited tools there to control the inflation to a large extent in that way, content. So they'll not be having that kind of freedom to cut the interest rate so easily. The RBI will not be kind of in a hurry to cut the interest rate so easily, because that's going to lead to the inflation going up. So we'll have to wait and watch what government is going to do. Now, one silver lining that can be there is the introduction of DTC and the rationalization of the tax structures in the country. So that is something which is very critical and the most wanted as of now. That is one. Second thing is the government spending has to pick up. Now, though the 68% of the spending is coming from the private side, the government, which is like the state government and the central government and the PSUs put together, is catering for the remaining amount of the capex spending. So that has to pick up steam. Now, the private capex, though many of the corporates have kind of controlled their balance sheet or deleveraged their balance sheets to a large extent, they're still hesitant in spending money in a big way. To that extent, if the capex has to increase, the demand environment overall has to increase. So the government policies has to manifest towards the boosting the economy, especially in the terms of manufacturing one, Second thing is they need to look at kind of doing the ease of doing business and kind of providing kind of the stimulus. For example, in the PLI schemes has to be introduced more so that the boost in the manufacturing as kind of improves, and then the private capex will also get kicked in. And adding to that, the interest rate cut will actually help a little bit more on the increasing the private capex also. So this will be the key things that the government has to focus upon, in my view. So the more important thing has to focus right now on the currency, balancing the currency and the inflation, managing the inflation, at the same time boosting the government spending. So these are the three things the government has to focus upon. And I don't think the government will be kind of leaving the fiscal deficit beyond 4.5% of the GDP. So in my view, the fiscal deficit will be curtailed at 4.5% of the GDP to a large extent.
Deepak, what is your view on internet stocks? In the AMC, do you have any exposure to any one of them? Despite the very sharp sell-off that we've seen in the secondary market, here is one pocket that has outperformed and done so in style. What is your view on this sector as a whole, and any stocks in the AMC that are present from this industry?
So few names we do own in the portfolios, for example, Zomato's of the world or Naukri.coms. So these are some of the names that we still own in the portfolios. Definitely they cater to that. Today, if you look at the kind of consumption pattern as a whole, if you look at the people are trying to avoid to go to the bigger malls and kind of go to the shopping, wait in the queue and then try to purchase the items, the groceries there. So today it's at the click of the button, they're able to get it at home. So obviously the kind of the convenience is what matters and just going to kind of play out in the medium term to longer term. So that's going to actually take up the footfall in the most of the retail stores to a large extent. So, and obviously the consumption is going to make the life easy for people. So this pattern of services is going to increase the kind of demand for these kind of the operations basically. So names like Zomato's or kind of Naukri.com will kind of in generally kind of will play out over a medium term to longer term. Obviously valuations will be a concern there in these counters. One needs to be watchful about the valuations of these stocks.
Yes, valuations, of course, are the key to everything, and that sort of prompts my next question. A sharp sell off, 10% lopped off from the Nifty. Many indices have seen much worse, and individual stocks, Deepak, have seen corrections of anywhere between 35 to 50% in some pockets. Is enough done, or are the coming quarters more painful for the broader indices and for retail shareholders?
So it's, as I said, it's going to be a year of stock pickers. So obviously, stock picking will be happening at a deep value and with an eye on the future earnings of the companies. So definitely, one needs to look at what growth that the company is going to deliver at what valuation. So that's going to be the metrics ratio that we need to be more concerned about while we are picking the stocks. So in my view, the correction is not completely over. Some more consolidation can happen. Until unless the currency continues to weaken, the FIIs will still continue to sell in the markets because it's going to be a negative carry for them. When once the currency rupee starts weakening against the US dollar, it's going to be a negative carry for them. Until unless the currency depreciation gets arrested, so you're going to see the kind of sell-off continuing in the markets. So that is the key thing that we need to look out for. So the moment the government changes some policy stance, or we also have to watch out for what US policies are going to play out. So until unless that happens, so this sell-off or the consolidation is going to continue in the markets, in my view. So.
Okay, now I think that's a very sensible explanation. A weakening of the rupee and a rising US 10-year yield together are two major negatives for FIIs, and they'll do all that they can to get out of this conundrum for the moment. Within valuations, Deepak, how do you rate the IT sector? Of course, the weakening of the rupee has been a very, very strong tailwind, but very sharp outperformance coming in on many mid-cap IT stocks as well as frontline counters. Is this a place where you are hunting, or is this a place where you are booking profit?
Definitely, yes. We have increased our exposure in the IT counters at least in the last few months, actually. So one, definitely because the interest rate cut that has happened in the US, it's actually a positive move for the entire IT space because the discretionary spending from the corporates in the US on the IT budgets, that's going to increase. So that will manifest in the form of the orders or the kind of the deal wins for the IT companies here in India. So that's going to be a positive move. Now we'll have to wait and watch because obviously there's an uncertainty of the Trump parameter here because if the policies on around the visas and all those things have been kind of hindering the kind of growth, that can also be a possibility there. If there are any kind of adverse policies that's going to be brought about by the new government, that's going to be negative for the IT stocks also. So the short term, I'll be kind of concerned about that. Barring that, I'm kind of generally bullish on the IT counter. The reason is when the policies are clear, especially from the US side. So obviously the deal wins are going to happen there, and if there's any tax cut in US, that's going to be positive for the IT companies even much more. The reason is this companies there in the US which are operating there, they have more money at their end that the discretionary spending to happening that will increase more. In fact, that is going to be positive for the IT companies in India. So we'll have to wait and watch what kind of policies are going to come out from the US. And obviously, it's going to be a kind of year of demand picking up in the space of IT for us. So,
Fair point. And this concurrent question on the US 10-year yield. Despite the fact that there have been successive rate cuts in the US over the last 1 quarter, 2 quarters or so, why is there such a sharp increase in the US 10-year yield?
so there are two parameters here. One is the economy in the US. If you look at this, the leading indicators there in the US economic questions, that's where the question of the demand picking up or kind of the recovery happening is a bit slower. So that is one. Definitely, though the inflation has just come up, it's not just inflation. The economic conditions has to depends on the labor market and other constraints like the housing stats and other various other leading indicators happening in the US. Most of these are kind of slowing down, kind of indicating towards a slowdown as of now. That is one. The second uncertainty is what kind of policies the US government is going to bring about. That's going to be still an uncertain as of now. So if you go back to 2016 to 19 when the Trump government was prevailing at that point of time, we had seen the policies were more inflationary in kind of nature. So increasing the duties and all those things are generally inflationary, will increase the inflationary pressure on the country and for the US as a whole. That's the reason you're seeing the bond markets reacting on the negative side and the yields are going up because of that. So until unless the new policies are going to be more friendly for the broader based economy or for the broader markets, we are going to see this kind of yields remaining elevated in the US markets.
Okay, fair point. And for how long do you think this elevation will continue? This is, of course, twinned by the fact that seeing that yield, US fund managers are selling off emerging markets and bringing money into the US. That is making the dollar stronger as well.
So the money definitely is moving out of the emerging markets because the currencies are weakening and the dollar is strengthening. One. Second thing is we are also seeing the policy expectations from, as of now, from the Trump government is going to be generally favoring the US manufacturing space or make America proud and all those kind of measures that's going to kind of is the expectations right now. That's the reason you're seeing the money flowing back to US. But if you look at the short-term debt market in US, that's where the money is sitting in the money markets right now. And also it's a fag year and also there's some amount of profit booking is happening because of that as well. So turning to the early next year, how the when after 10th when the new government takes shape, depending on how the policies are going to come out. So obviously the money can reverse back quite significantly towards the emerging markets as well. We have to wait and watch how the policies are going to change. And to add to this, we'll have to also look at the other emerging markets, what kind of policies those countries are going to bring. For example, China is talking of stimulus package. So we have already talked about a huge stimulus package announced by Chinese government. So if they continue to introduce those stimulus package and try to favor that, and then the flows can always reverse back towards China also. So in that way, India also has to take up kind of some kind of measures of boosting the stimulus so that the flows can come back to India as well. So that's something that's much awaited from the government side here as well.
Okay, fine. Let's look at the other parts of the market, especially FMCG, where, after many decades, I heard a phrase coming in from Nestle that the Indian middle class no longer exists or something to that effect. Then you have this fiasco that's at Asian Paints, of course, driven in part by a very strong business performance by Birla Opus. Are you of the view that the middle class is in pain, or is it that these old world companies have absolutely stopped to innovate and have not been able to respond to a new India where consumption patterns have changed dramatically, beyond staples?
So definitely yes. If you look at the consumption pattern in India, it's more towards most the premium premiumization is what has been driving the consumption as a whole. So today people are ready to spend money. So they are looking at innovative products definitely. So the entire space in the FMCG side has to re-innovate on the premium side. So the premium segments will generally tend to perform better. I know it's going to impact. We can't say that the middle class is kind of died down because of this. Definitely not. Obviously, that the lower end of the economy, there is a bit amount of slowdown that has impacted. So that's the reason you're seeing a bit of slowdown, and the rural side also is a bit seen as a bit of slowdown because of the weather conditions. Now that's behind us now to a large extent. We should see the kind of turnaround happening in that side of the economy because we are seeing the rural, the at least the leading indicators on the rural side kind of showing some kind of uptick, especially on the sowing patterns and kind of the tractor demands, and all those things are showing a positive side. So the rural economy of the side is kind of picking up. So that means to say, and also the bottom line, the bottom of the economy, like the MSMEs and as well as the labor class, is also kind of going to see some kind of pickup happening because the consumption should improve once when the government spending picks up. So out of the 11 lakh crores of budget spending what government had announced, so around 4.5 to 5 lakhs is what the government has already spent. So the next 3 months is where the critical aspect where the government has to clear up the other spending which they had planned. Until unless they do that, the pickup in the consumption also will be a bit slowed down and kind of back-ended as such. So we have to wait and watch how things are going to manifest now. Second thing is talking about the premiumization and also the renovation of these companies. Definitely, yes, the companies have to renovate themselves and coming out with different products of kind of positioning, especially on the premiumization. Definitely, that part of the economy is not slowed down at all. We are seeing kind of consumption being stronger on the premium side. So I think the companies have to reinvent themselves, positioning the products at the premium side. Look at more of to do with the value addition rather than looking at the volume as a basis. So.
And one sector that's performed in a secular uptrend is the real estate space. There is a lot of positives that are dovetailing into this rally that we are seeing into Lodha, into Brigade, into Prestige, which is the possibility of a rate cut, and of course, aspirational buying of bigger homes. How are you addressing this sector within Shriram AMC? Are you looking at real estate ancillaries or builders? Do they make sense to you?
So we had some amount of real estate space in the middle of the year or the beginning of the year of 2024. As we entered in the last quarter, we don't have any real estate names in a bigger way in our kind of portfolios. So we have exited the real estate counters because one, the valuations were a bit stretched, and we know that most of the things are already kind of priced in into that kind of a thing. So as the slowdown came into the picture, so the kind of demand also is a bit of on the slower end as of now. So we'll have to wait and watch whether the rate cut really manifest into kind of bigger demand coming in. So the aspirational buying is what is still driving. But now it's all about the incremental growth. How much can the growth can really kick in from here onwards? So that's what will drive the future of the real estate space. And obviously the prices are also higher. So today, if you look at what other avenues for the people are having from a saving point of view, either it's going to be the equity markets or in the form of the real estate. These are the two major avenues apart from the gold and silver. So the major avenues for the investments is either in the form of the equity markets, gold and silver a little bit, or in the form of real estate. So the fixed income or the fixed deposits are kind of a bit of slow as of now. So that's the reason you're seeing the real estate pickup also happening in the last 1.5 years. So going ahead, will the recovery happen or the growth will continue? It all depends on the future growth of this economy or the future growth of the sector. I don't expect in a big way rally happening in the real estate going out in the 2025. So I'll be kind of a bit concerned on the growth rates going ahead. So I might be wrong. If the rate cut manifests and the growth picks up, yes, you can expect the growth also to coming back there. So
Fair point. And within this listed universe and the rally that we are seeing in IPOs, are you participating in any of them? We've had some fantastic listings, Premier Energies, Vari Energies, KNR Refrigeration, and then, names like MobiQuick, Vishal Megamart, so many of them. Are you participating in this IPO uptick, or are you staying away?
So, as an anchor investor, definitely we can't participate given our size of the EM. We don't kind of get a decent allocation on the obviously on the anchor positioning. Definitely, as QIB is a positioning point that we can do, but looking at the kind of subscription that's happening, the kind of allocation that you get, so you have to block your money for 5 days or 10 days before you get the allotment. For the 10 days, you're only getting the TREPS kind of a return on the money that you've blocked for the IPO for the whatever applied. So it doesn't really make sense end of the day if you look at the kind of growth that you get on the kind of listing. So it would make sense for us to wait for a correction post IPO and then look at the counters post the listing. So we are not participating in any of the IPOs as such because of this.
Okay, fair point. Deepak, it was a very interesting conversation at the fag end of the year. Thank you so much for spending your time. And of course, season's greetings and the best wishes to you, your team, for 2025.
Thanks, Another. Thanks for having me on the show, and wish you all a happy new year and all for the visitor, the viewers as well. Thank you very much.
Okay, a bit of a green tick on the Nifty, and the deep green is now shifting towards light green. The Nifty still above 23,800, Nifty 500 22,450. The Nifty Bank is still up 123 points, and the IT index has added 55 points to its tally of 43,717.